Good morning, everybody. Oh, that was nice. Little drum fill to welcome me and to welcome all of you to a wonderful Friday morning. I got the day right. And Fridays are great. Well, I mean, we got a little bit of squishiness out there, right? We got a little bit of squishiness in markets again, which I've been talking about a little bit with my Turbo Income members. And let's take a look at the screen here. Yeah, we talked a little bit about how there's a bit of deleveraging going on. We saw the crypto trade a few weeks ago, which was sort of that first sign. Remember, we had such a strong market, very little volatility, a Sharpe of 10. So if you guys don't know what that is, that's basically, an incredible amount of success doing bullish types of things, right? This was on put selling, for example, very, very bullish. Very, very few trades that went wrong. And that's very unusual, right? You don't see that often and that level of success. So in those kinds of markets, it feels easy. And so when that crypto kind of washout happened, that brought us to a new reality, which is there could be a little bit of leverage unwind. Now, I do not predict that this is going to turn into anything massive. We do have some issues with jobs that definitely need to be dealt with. But I will say that, overall, I think a lot of the bullish aspect is intact, good earnings. We probably have a Fed that's going to be even more likely to cut rates, even though the prediction for a December cut is a little bit lower than a certainty. I think we were around 60% last I looked. We don't have a lot of data. Now, some of the secondary data that we've seen for jobs is showing that we are kind of, we're seeing a little bit of a bump in unemployment. And I don't think that's a surprise to anyone. We know that this new phase of AI is going to involve a little bit of not necessarily letting people go, but not hiring as much. And so there's going to be a little bit of both of those, unfortunately, as the economy starts to transition to this new reality. And that's going to be, unfortunately, it's going to be positive for company profit margins. That's fortunate part. Unfortunately, it may be a little bit difficult for employees who are going to have to kind of retool and figure out what they want to do. But we talked about the situation at Salesforce, which is quite positive because they're getting rid of some of those more automated type things and replacing them with more value-oriented things, right? People to serve the relationships as opposed to kind of spending so much time looking for new relationships. So this is the kind of transition that we're going to see in the economy, where some of those automated tasks, which younger people tend to do. So that's why it's a little bit of a difficult reality for younger people overall. And that is going to be difficult. We saw not to get political or anything, but we saw the reality of the mayoral race in New York. Is that an expression of dissatisfaction with the way things are going? Could very well be. So first of all, I am Hans Albrecht, pro option market maker for 15 years. only getting paid if I made money each month. So that is how you learn to do this game and to respect every single dollar. So very proud of that part of my career. And then I transitioned over to a portfolio manager role, managing around $750 million in income funds, right? So income. And that is why I have on my screen here something that I'm very, very excited about. And I just want to mention this quickly here. Join me for my live 2-day summit, which we're having on Monday and Tuesday. And it's going to be what we call the Income Summit 2025. It is a wonderful, wonderful project that really hones in on what people are interested in and my view on how to do this very holistically and in a very balanced way, right? So I'm going to walk you through what I call the holy trinity of income, my unbreakable rules that have kept me consistent over the years and that have helped me to develop an approach that really looks for all the things we're interested in. Stability. Look, there's a reason why members of Turbo Income are saying it's the best service. I'm getting the best returns and without a lot of headaches. So everything's fantastic at Option Pit, but this is really kind of that strategy that is steady. It focuses on income. It focuses on upside, because if any of you know me, I hate to give up upside. I like to call it strategic greed, but really it's just thoughtful approaches when being aggressive, right? It's not just doing what your neighbor is doing because he said he made a whole bunch of money on some meme stock, so you feel like you've got to pile in. It's not jumping into something that Josh Brown said, even though I love him, on CNBC. It is thoughtful approaches with rules and guardrails, and that's really what the game is about, right? It's about, I like to see it. It's like, people play with offense and defense. The best offense is a great defense, and so vice versa in a way, because if you set yourself up for better setups, then you are going to avoid more of the problems. So that defense can be sort of, implemented into your offense. And I think that's really one of the best ways. So we're going to talk about how much I put in per trade every single time, rules, guardrails. We're going to talk about the cash reserves that we want to keep for pullbacks. And depending on your portfolio, we're going to be talking about $100,000 portfolio. We're going to be talking $1 million portfolio. We're going to be talking about a $10,000 portfolio, which I love because I'm going to get people nice and early. I don't want the person with $17 million. I want the person who's in early, and I want to help them to grow that by multiples over the years. So that is when you want to learn. You don't want to learn this stuff later on. You want to learn this stuff early. And if you've made $17 million, congratulations. I want to take your course too. So we're going to tackle these accounts on Monday, the 100,000 and the million account. And then on day 2, we're going to focus on that $10,000 account. And we're going to talk about those turbo trades and how they can accelerate growth with that defined risk, with that very, very pro strategy. Okay. A lot of people throw around the word pro. This is a pro strategy. This is where pros talk to me. They call me up and they go, yeah, I'm doing more of these. And I go, yeah, that makes sense. Pro strategy, right? So we're going to combine a little bit of steady Eddie income with some pro strategy. So try to be there. It is going to be fantastic. And you're going to learn some stuff. I guarantee it. You're going to learn some stuff. You're going to come away with some great ideas and a thought process. So let's talk about markets today. We have got a little bit of squishiness again. So yesterday, of course, I want to talk about some of the important things that I have mentioned over time, which is we want to keep an eye on those indicators of where the big money is moving, right? So why do I love to look at these ratio charts? Why do I look at my breakout ratio? Because it helps to keep me doing what the bigger money is doing. Do I want to buy something that's in a free fall, right? And everybody's tempted to do that. That's one of the great ways to get into trouble, is trying to catch that falling knife, and you catch it today, and then tomorrow you go, well, I already bought some yesterday, so I better buy more and average down. And then you do that 7 days in a row and you find yourself in a problem. I like to jump on horses that are already running out of the barn. I want to choose the horse in the barn. Sometimes I can do that, but I like to also jump on the horse that is already getting going. It's probably bad for my back. My back probably can't handle jumping on a horse, but I'm going to do that for you in Turbo Income. So that's what these ratio charts can help me with. which is, for example, let's take a look at our, come on, bar chart. You can do it. You can do it. Oh, you little, I want to see this breakout ratio. This is important to me. All right, let me try this again. So this is really the state of markets is really trying to figure out. And if you guys have been watching since way back, since the special situations AI that I did, which by the way, we killed it on Palantir, on Snow, on Nebius, on all these names. These were all great trades. And lately I've been saying, you know what? I think, if you guys have been watching, I think one of the interesting places to be is MAG, because it's safety in significant balance sheet strength, and the companies that are making all the money, right? Meta's not doing that great. But in general, these big companies are very, have been doing very well again. We can see actually right here, let's take a look at MAG right here. Here's energy starting to go up a little bit, starting to, a little bit of a shift into some safer plays. If you look at the low vol stocks, we can see they haven't done well, as it's been all about MAG. And that was one of the things that, we've been talking about over the last couple of weeks, has been the very low breadth of this market. Do you guys know what breadth means? It describes the ability for markets to either rise in a very concentrated way, which is as the MAG have done over time. A lot of that, because they're so heavily weighted in the index, they will carry a lot of the weight in terms of the price performance. So I think it was a week ago, they talked about how how we had one of the worst breadth days that we've seen in a long time. I think they were even saying decades. And so what that was a good chunk of the market was actually not doing well, but because those heavily weighted big tech, the Amazons, the larger names that have this sort of impact on price performance in a weighted index, were doing well. So this small handful of names basically trumps the rest of the difficulty that the rest of the market is having. And so a lot of people think that that's not very reflective, representative of the real market, when it's just a few names doing well, and the market's up on the day, even though a lot of stocks aren't doing well. So I call that the S&P 490. We've got the S&P 10, which are great, MAG 7 and a few others. Maybe it's 15, maybe it's 20, whatever. Okay, it's not just a few stocks, but we have, and then you have the rest of the market. Now, I've been looking for a broadening out, and that has become challenged lately because rates have stabilized. Even though the Fed is cutting, we're seeing yields actually push up, and that is a concern, right? The market is not happy and doesn't believe that we have this ability to cut rates over time, which I think we do, because employment is going to be the problem, and inflation is outside of some areas perhaps related to AI, where there's going to be a shortage of certain things. I believe that there won't be wage inflation, and I think inflation's under control, and so Powell has no choice but to focus on the jobs picture. Will cutting rates help jobs? I would say doubtful. That much. I'm a little doubtful, but what choice do they have? So this is the reality of this market that we're in, is that we're going to have to cut rates if the economy slows a little bit, which that's debatable too. But he has to focus on employment, and he focuses on inflation. So he's kind of between a rock and a hard place, because he's got to lower rates for the employment backdrop, which is weakening and softening. Even though, probably if you asked him over a beer, he'd be like, I don't know how this is going to help. You're going to give people the ability to invest in what? What are my two favorite letters? Does anybody know my two favorite letters this year? What are they going to invest in when you give them the ability They're going to invest in AI. And what is investing in AI? Invest AI. They're going to invest in processes that probably allow them to need fewer workers, to streamline processes. I think we'd all like to think that it will give them the ability with their existing 50 people to do what they could only do with 50 before. Now they can do it, they can do the work of 75 people. Well, that is a wonderful thing, right? I hope that is the case. Freezing his vid a bit. Oh, did the screen freeze? You guys good? Oh no. Why is my screen freezing? Okay, sorry guys. Yeah, it's cold up here. Yeah, I need to recharge my batteries. I've got a Tesla CPU, and I guess it's running out of steam. Oh, hey Nina. Okay, so let's take a look here. Let's take a look at our. I could go on all day about the market and macro and problems and positives. But you know that I'm generally positive, right? I'm generally positive, and I think I like to be positive. And if you guys knew me years and years ago, I wasn't as positive, because as a market maker, a lot of the time you kind of were rooting for the market to go down, because that's where you kind of got movement, you got volatility, and I was very much a long option trader, right? A long option trader. So that for long options, you really want you want movement. You're going to benefit from option pricing rising, right? When the VIX, what happens when the VIX goes from 15 to 23? That's the fear gauge, right? When the fear gauge is rising and people are fearful, the options that I own are often making money. So you want movement back and forth. Some of my best years were 98, 99, 2000, 2008, 2009, some of the other sell-offs. That's fine. But now I'm more of a positive guy. I'm more of a glass half full guy. But right now we can see that, look at our breakout ratio. Remember we talked about this a few months ago, and I said we're going to get up through here, and then that puts us, it's starting to make improvements in the bottom line. Yeah, I want that narrative to kind of start to come out a little bit, right? I don't know if these CEOs are going to be disingenuous. They may say things that kind of, that will be, hey, AI is helping us. It's more collaborative, and maybe they're kind of quietly. I mean, it's hard to argue with job cuts that we're seeing out there. So there's chit chat, there's reality and lip service. There's lip service, and then there's reality of what's going on out there as well. So we've got to be aware of that. So look at our breakout ratio. Why do I like this ratio? Why am I pausing here? I'm pausing on bullishness just for now because we're seeing this. We go back to, this is 2021, where I want to explain this chart to you. So when this chart is going up, it means that the fast money is outpacing the steady big cap balance sheet heroes, those balance sheet heroes that I like to call them. The silly money is winning. Remember 2021, 400 PE on Square, and all this stuff. So that's the kind of market that is. Now, when this is going down, we see an underperformance. We see an underperformance of the fast money, the animal spirit money, the loose change kind of money. Let's buy anything that isn't tied down, and the steadier money starts to take over. Right now, make no mistake, this was a market where even big caps went down, but the small nonsense got annihilated, right? It got annihilated. So remember, this is just a relationship. It doesn't mean one is necessarily going up or down. It's a relationship, and which one is doing better, which one is outperforming, which one is outperforming even on the downside. Are they not losing as much? Well, that's going to be reflected. So we see this long consolidation here for years and years and years, and then we finally got a breakout into our new reality of GPT and AI and everyone just going nuts for this. We called this early, of course. We were talking about this 4 or 5 months ago. And now we're below this line. So I'm a little bit lukewarm on things, and I've gone to cash quite a bit in this market. And I'm sort of watching. I want to see this kind of recapture that red line. I want to see that. That is going to be the breakout again. I think that is a positive. If we start to see the silly money taking over again. For now, what I've said is if you guys have been paying attention, I've said I'm hiding in mag, I'm hiding in data plays like Snow. Palantir's a little bit expensive. Snow, Datadog, which had a position on yesterday, done well. We didn't have that in Turbo Income, but that did well. I didn't have very much of it, unfortunately. But positions. I think data is really one of those places where there's no question. I think there could be competition in the data center, in the semiconductor area. I'm not worried about NVIDIA in particular, but there's competition there, and things are changing all the time. Where people have to spend money, in my opinion, is they've got to figure out how to use AI, which is going to be, how do we crunch the numbers? How do we take our 75 silos of data and information and customer information and start to turn that into something that can generate value for us as a company? So think of what Snow does. They just have more and Palantir. People are paying them more and more and more. Revenue retention numbers are incredible. So companies don't exactly know how to do this. And maybe if you're a big company, you can hire a team, but a lot of companies don't know, and they don't have time to figure this out. The world is changing too fast. So I think they're gonna invest in the knowledge. Think of it almost like taking a course, right? You want to become, you want to learn to do something well, take a course, right? Take a course, learn how to do it well. So these companies are going to be taking courses from the Snows and the Palantir. Anyway, so I think that's a positive area. I think there's some data center plays that I kind of like as well. But in terms of that silly money, I'm a little bit on the cautious side here. There are a few names like Micron, which we've been in Turbo Income. We just closed a couple of trades. Let me show you. We just closed a couple of trades. This is how we turbo it. This is how we do it. This is how we do it. Let's go here, 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 here. So we closed a couple of turbos in Amazon, Apple. We did one 122. We closed an NVIDIA on here. Where's our NVIDIA? No, it's not on here. We did a really good one in NVIDIA too. A bunch of Snows we closed, 147, 127%. So some nice trades there. And then in our Leaps trades, we're just kind of killing it, right? We closed another Amazon. The Nebius I closed. I did some cover calls. So sometimes we'll do trades where we add an income layer to a long play, right? That's where you start to kind of move a few. You're moving the needle in a couple of different ways, right? So I talk about on Monday, don't miss it. Don't miss the income summit, because we talk about all these strategies and how they work together, right? How do those work together to help me in those individual sleeves? And that is really the key to oh, he's rapping. I'm rapping. We can rap in Canada. No. We have some good rappers. We've got Drake. Drake lives right here. Drizzy. I call him that because it makes me cool. So a lot of good things happening, I think. And I think this is sort of a healthy pullback. I know that's kind of a stupid cliche, but I think there's been and as soon as that crypto thing happened, I said, you know what? I said the Vol genie is out of the bottle. It's quite possible that's going to spread to some of the stocks, right? So we're seeing one thing that gave me pause a little bit yesterday. Rawhide, I'm cool in my mind, even though my kids will of course disagree. I'm going to be, I keep texting Drake, but he doesn't return my call, so he must be having trouble with his cell phone service or something. This is one thing that gave me a little bit of pause here. Yeah, you know what? I got to use Suno and like make a nice rap. I'm going to start every Friday with a wicked rap. Me just like rapping, and I'm going to just like, I'm going to wear the big clock like Flavor Flav. You remember Flavor Flav? I always loved how he wore these different clocks. Like that was his accessory. That was his accoutrement. He was like the clock guy, and I love that. I need a gimmick like that. If anyone has any ideas, I need a gimmick. And so one thing I thought was interesting was look at Hood. This has been an absolute darling, beautiful numbers, and then just kind of fell out of that a little bit, right? Back down to 120. It's rallied a little bit here. And so what I thought was interesting is, some of those fintechs really kind of the ones that were hanging in there, they finally gave it up. So maybe that's a good sign, right? Take a look at this. Here's your SoFi, good numbers as well. And that's kind of recycled a little bit. So definitely signs that they finally gotten to some of those areas that have done well, because make no mistake, in a big sell-off, right, eventually they get to even the positive stories, because if something becomes a bit of a liquidity event, if you're getting killed in crypto, you're getting killed in, some nuclear stocks or whatever it is that are coming down, you're going to have to raise money somewhere. So eventually, and that's why we say in big sell-offs that things correlate to one. What is correlation? Well, when one thing happens, the same thing happens elsewhere, right? Things are correlating. They're all starting to go down. In a healthy market, correlation is lower because there's movement. There's movement. Some things are doing well, some things aren't doing well. You have a mixed bag of things as people shuffle things around in a sort of thoughtful, non-panicky way. But in a panic, things can correlate, and they eventually will sell many types of things. Not everything. They may move into, fixed income and, consumer staples, sorts of things. So what I want to see, guys, is I want to see the VIX basically stay under 20, right? So right now we're above 20. I don't think there's a big issue with the term structure. I know we've only got a couple of minutes left. VIX, here we go. So this is not like, I would say this isn't like super, super panicky. So we're actually not, unlike a few weeks ago, remember we got this massive move in the VIX. It moved up 5% on like a very small S&P move. So not a ton of beta, but those front months are now flat. So this is a little bit of caution. The VIX cash is not above those front two futures. So it's not crazy. It's a market that, and December is usually, a little bit lower because of the holidays. So, in my view, this isn't anything super, super panicky yet. Now, should it be panicky? Well, not really. I mean, look at the SPY. It's not like, the market is that far off the highs. Yes, it broke this neckline here, which opened us up to here, and I think could open us up to 255 to 655 if it really wants. But the fact is, it's been mostly kind of the higher beta stuff that's been coming off. So I think you really want to watch. You want to watch for stability in the VIX. You want to see that come down below 20 again. You want to see this curve kind of go into a contango again. Contango means, the front month is lower than the second, is lower than the third. And this is looking okay. And you want to see the VIX below the curve. And so this isn't super panicky yet. We'll have to see how the day turns out. And you want to see some of this fast money kind of come back in again, right? I think that's sort of going to be a sign that the mania is back on, because I don't think AI is done by any stretch of the imagination. But stocks that have gone up 4 or 5 times, 6 times, they just, there's gravity. At some point, there's gravity. It's easy to say after the fact, because when they're going up, it feels like there should be gravity, and there isn't. But eventually, gravity sets in. And what I find is that when the parabolas end, you don't want to grab that first $2 drop, right? When parabolas end, they can kind of go and go and go and go. So everyone, thank you for watching today. And do not forget, the Income Summit is on Monday and Tuesday, and I look forward to seeing you all there. You're absolutely going to love it. This is my wheelhouse. This is what I've done for almost 3 decades professionally as a fund manager. You do not want to miss it, and we will see you next time and on Monday.